So let's talk about something that can absolutely blow a major financial hole into your entire retirement planning. Once you get to retirement, you want things to go exactly how you've planned them out to go. You want to be financially comfortable going forward. And there are a couple landmines in here that people get surprised about all the time. And what we're going to talk about right now are tax brackets and IRMAA. Very exciting stuff. And IRMAA with Medicare, most people don't understand at all, but I'm going to show you how to see it so you understand it and you can plan for it, and so that it doesn't come up and just blow a major hole in your whole financial picture, because it can absolutely do that. It can take your Medicare premium from $185 a month to well over $600 a month without you even really doing anything. So you need to understand how that happens and what contributes to it so we can manage our things going forward. You're going to be facing things like withdrawals out of your retirement accounts and required minimum distributions, all this stuff that you hear about, and it has a major financial impact on a couple of different things. So I've made this nice little brochure here that gives you all that information. I'll put a link below the video where you can download it. You can have a copy of it. You absolutely want to keep a copy of it. I'm going to be doing some videos on how to manage your RMDs and how you can either eliminate or delay them, and just something you'll want to understand as you get into your 70s for sure. So make sure you subscribe to the channel so when the videos come out, you'll get notified of them and you'll understand how to make this stuff work to your advantage. But right now, let's talk about tax brackets and IRMAA. So when we look at this form, and I made this form up myself, and I'm actually pretty happy with it. I think it's going to work out well from an understanding standpoint. So first thing we need to understand with tax brackets, and you may or may not be familiar with how it works. You may just leave it all to your accountant, whatever it may be. But you have tax brackets that start at 10% and go all the way up to 37%. Depends on how much income that you make as to what tax bracket you're in. Now, something to understand about tax brackets, a lot of people are confused about this too. It's a progressive rise. So in other words, the money that you make in the 10% is going to be taxed at 10%. The money that you make in the 12, 22, 24% is going to be taxed at that rate. It doesn't go back to the entire amount that you've made. It's progressive. So if you bleed into the next tax level, not usually a really big deal, because only that part of money is going to be taxed at that level. The rest of it is still going to be taxed below at whatever category that it falls into. Not so much with IRMAA. With IRMAA, if you bleed in, you're jumped up right to that next level no matter what. So let's take a look at our tax brackets, and then I'm going to tell you what's going to count towards these tax brackets and what does not count. You'll be surprised, because lots of things count to put you into the different levels of where they fit. So let's take a look at this chart so we can understand it. So you can see in the black, we have the tax rates. So you have the 10%, 12%, 22%, 24%, and in the red is the IRMAA and your Part B premium. So you can see, to be in the 24% tax bracket, you would make more than $103,000 single, more than $206,000 if you're filing joint, less than $197 single, less than $394 joint. So that's put you in that 24% tax bracket. Now, a lot of people, some people, I don't know the numbers on it, but when you retire, you may not have income anymore. You may quit your job, put it in the past, and be done with it. But a lot of people, when they retire, still have either self-employment income or investment income or rental property income or whatever it may be, that's going to be income that's going to keep you into this tax bracket or that tax bracket, whatever it may be. So we need to understand that. So you can see the Medicare Part B premium right now in 2025 is $185. That is the base premium. Now, with that premium, it's important to understand it's income adjusted for Medicare. So when you're going to be on Medicare, and everybody's pretty much going to be on Medicare unless you're a federal employee, unless you have a retiree package from a major company, you may not be in Medicare, but everybody else is going to be in Medicare, and everybody else is going to pay the Part B premium, regardless of whether you're on Medicare Advantage or you're going to stay on original Medicare with a supplement. You're still going to have that Medicare Part B premium. So the base premium is $185. Now, it jumps when you reach $106,000 single or $212,000 joint. And it jumps up to $259 from $185 a month to $259 a month. And again, if you're making $105,000 single, and we'll kind of just talk single right now, you can figure it out if it's joint, you're paying $185. If you make $106,001, you're paying $259 per month for your Medicare Part B. Now with this IRMAA stuff, they go based on your tax returns. And the tax returns that they have access to are from 2 years ago. So they can only see 2 years back on your tax return. So this would be for stuff that has happened 2 years ago, where you're going to get a big surprise where you've forgotten that it all happened 2 years ago, and now your Medicare Part B premium is going to elevate for the next year or however long you made that money. So it's based on however long, whatever year you made that money. If you made it for more than 1 year, your increase is going to continue. If you made it just for the 1 year, it's only going to be for the 1 year. But let's get a little deeper in this. You can see in between the 24 and the 32% tax bracket, IRMAA has the ability to jump up a number of times. So it jumps again at 133 single, jumps again at 167 single. So if you show income between 167 and 200 single, or 334 and 400 joint, your IRMAA, your Medicare Part B premium is going to go from $185 to $480 a month per person. So if there's two of you, do the math. $560 a month, or I'm sorry, $960 a month for your Medicare Part B premium. Almost $1,000 a month for your Medicare Part B premium, as opposed to $185 per person. So again, most people don't see this come. And again, it's a rear looking window from 2 years ago on where this income is going to count. So after that, you can see you get to the 32% tax bracket. Now, when we talk about these tax brackets, this is a big one, going from 24 to 32. And again, if you bleed into it a little bit, if you made $198,000 single, you're only going to pay 32% on that $1,000 over that 197 number. So it's not that important. But the other thing to understand with this stuff is you need to manage your withdrawals out of your retirement accounts. And you'll certainly need to manage your RMDs, your required minimum distributions. This is where people get shocked quite a bit. They've saved up all this money in their 401k or their IRA account, and then when it comes time to take it, they kind of don't think about having to pay the taxes on it. So if you take out $100,000 and you're in the 32% tax bracket, you're only going to get $68,000 of that $100,000 to actually spend. $32,000 is going to go to the government. That's a crazy number. So we need to manage this, because it's going to happen sometime in our retirement, or it's going to happen to our heirs when we leave it to them. It'll still be taxed when it goes to our heirs. So we want to manage it to keep it in as low of a tax bracket number as we possibly can. But IRMAA is going to throw you for a loop for sure. If you are past that 32% tax bracket and you are over now 200,000 single or 400,000 joint, it's going to jack your Part B premium from $185 a month to $591 a month. That's crazy. That's more than $400 over the original amount based on your income. And we're talking $200,000. That's not a crazy amount of income. And a lot of people, again, coming into retirement, are still going to have this kind of income. So your Medicare premium is going to be significantly higher. And then when we get to the top level, if you're more than $500,000 a year, it's going to take your Medicare premium all the way up to $629 a year. So pretty significant difference between that 185. And then you can see the 35% tax bracket up to the 37% tax bracket. And again, all progressive on the tax side. So if you bleed in a little bit, not that big a deal. The big gap is between the 24 and the 32. Pretty significant 8% difference between those two tax numbers. But we need to manage all this. Now, stuff that counts towards your numbers here, so towards your income, just about anything where you're getting income. So we have wages, salaries, bonuses, freelance business income, Social Security benefits, the taxable portion of your Social Security. That's another topic where if you make X amount of money, your Social Security benefits are going to be taxed. 85% of your Social Security benefits can be taxed. So where you get X amount from Social Security, first you got to pay 15% back to the government. Doesn't make much sense. Government's going to give you money, then they're going to take 15% back, but that's how it's going to work on Social Security. Retirement income. This is the big one. This is where most people are going to be utilizing their traditional IRAs, 401ks, 403bs, your pensions and annuities, the taxable portions. And I'm going to be doing some videos on how to transfer, how to do some Roth conversion stuff where it takes you out of that pre-tax money and puts you into taxable after-tax, post-tax money where you don't have to pay taxes anymore. And we can do it in a way where we can get creative and really not have to pay the taxes ourselves. I'll show you in the videos. Make sure you subscribe to the channel because they'll be coming up soon to show you how to do that. I think it's very exciting and a great way, especially if you got a large IRA, 401k. A lot of people have $1 million, $2 million, $4 million in these pre-tax accounts that are just waiting to be taxed. And so we want to try and mitigate that as best we can and really be as creative as we can so we don't have to pay as much or we don't have as much pain in paying those taxes. On to investable income, capital gains, dividends, interest. What falls in here is the sale of a home, a piece of property, capital gains tax. So if you live in a home and you've lived in it for 40 years and you paid $100,000 40 years ago and now it's worth $500,000 and you sell it and you have a capital gain, that's going to count towards all this tax bracket and IRMAA stuff. So you got to figure out where that chunk of money is going to fit in on this chart for your tax bracket and your IRMAA. Very important to understand that when you're going to do a major transaction like that. Rental property, royal income. A lot of people have rental properties. You may own a duplex or a couple duplexes or a bunch of duplexes or an apartment building, something like that. All going to count into this chart for tax brackets and IRMAA. Other taxable income, alimony, unemployment compensation, gambling winnings. Is there such a thing as gambling winnings? If there is, then I'm not sure how that works, but most people have gambling losses, which I don't know if they can write them off or not, but we don't want that fitting into this tax bracket IRMAA stuff, but all this stuff will. So whatever basic income you have, and it's pretty much MAGI. And the MAGI for IRMAA is adjusted gross income plus tax exempt interest. So that is what fits into the IRMAA stuff and these tax brackets. What does not count into these brackets, Roth IRA distributions. So post-tax money. So if you converted from your IRA to a Roth, the Roth stuff going forward doesn't play into any of this stuff. So very important to manage that. And again, I'll make some videos coming up showing how we can do that in a creative way that's much less painful than just paying the taxes that you normally would if you're going to take out 100 grand or whatever it may be. Life insurance proceeds do not count. Return of principal, loans, inheritance do not count into your tax brackets, into your IRMAA kind of stuff. But a lot of stuff does. And just the last thing people want is when they're especially married. If you're married and all of a sudden 1 year, because you did something a couple years ago, your Medicare premium Part B goes from $185 a month to $629 a month times 2. That's a big number. So that can blow a hole in whatever vacation plans you had coming up, or if you're going to Bali or whatever it may be, it can absolutely create an issue for you. So we want to manage that. I'll put a link below this video where you can download this and keep it with you so you can see it and feel it and just understand it so that we know what's coming. And that's the best we can do. And then we got to manage it as best we can. I got a great way to move stuff out of an IRA, a 401k, a qualified account into another qualified account, and then transfer it into a Roth account, which then makes it tax-free forever. even the money it makes going forward, the interest, the gains, the earnings are all tax-free. So you can just take the money at will without having to pay taxes on it. And that's, to me, an exciting way to do it, and what we certainly want to accomplish as we're going. So I'll show you all that very shortly. Subscribe to the channel, hit the notification, that little bell thing. It'll tell you when the video comes out. That way you'll be able to see it and understand it. And then I'm happy to help with all this. Give me a call. I'll walk you right through it, and we'll just get things done the way they should be done. I hope you found this helpful. Have a fantastic day.